When a bank like TD makes money, it's not all that different from how any business turns a profit, just on a massive scale. Think of it as a financial ecosystem where every service offered is a potential revenue stream. TD, and banks in general, primarily generate income through two main avenues: interest income and non-interest income. This is the classic way banks make money. It's all about the spread, or the difference between what they pay out and what they bring in. TD Bank takes in deposits from customers, which are essentially loans from you to the bank. They pay a small amount of interest on these deposits, like on your savings account. Then, they lend that money back out to other customers in the form of loans and mortgages. The interest rate on these loans is significantly higher than what they paid you for your deposits. The difference between the interest they collect on loans and the interest they pay on deposits is called the net interest margin, and it's a huge source of profit for them. Let's say you put $1,000 in a savings account with a 1% interest rate. TD pays you $10 a year. But then, they take that same $1,000 and lend it to someone else for a car loan at an 8% interest rate, collecting $80 a year. They just made a profit of $70 on your money. Now, multiply that by millions of customers and billions of dollars in deposits and loans. You get the idea. Non-interest income. This is where the business gets more diverse. Non-interest income comes from all the other fees and services banks provide. This includes service fees. Ever been charged a monthly fee for your checking account or a fee for a transaction? That's a direct source of non-interest income. This also includes things like ATM fees, overdraft fees, and late payment fees on credit cards. It's a steady, reliable source of revenue. Wealth management and insurance. TD Bank also makes a significant amount of money through its wealth management and insurance arms. They earn fees for managing people's investments, providing financial advice, and selling insurance products like home, auto, and life insurance. Wholesale banking and trading. On the more institutional side, TD's wholesale banking division provides services to large corporations and governments. They earn money through things like advising on mergers and acquisitions, underwriting new debt and equity issues, and trading securities. These can be very high-margin activities that generate substantial revenue. By combining these different strategies, from the simple act of lending out your savings to complex financial advisory services, TD Bank has created a robust and diverse business model. It's not just about one thing, but a whole network of services that keeps the money flowing.